enough about the markets and cricket for now. Let's go back to the markets at the high point of trade for the frontline index. Sacchitanand Uttekar of Tradebulls joins in. Sachi, you can tell us about the Nifty chart and you can also tell us about Team India's chart.
Well, I think both the charts are looking positive, have always been positive. So if you look at Nifty itself, the way it has responded to that support at 25,400, 450, where it's 20-day exponential moving average, 5-day exponential moving average is placed, Nifty has been sustaining above it on a closing basis. Even today, the call writing action at 25,600 would be significant. But if you look at the way the Nifty is rebounding, plus the constituents which are pushing it higher, there's a good chance that we may see this particular swing extending towards 25,700 during the day. We are expecting the expiry to shape up somewhere close to 25,650, 550 kind of a zone. So the bias for the Nifty for the day at least remains positive. Even right now, some momentum longs can be considered, keeping a stop loss at 25,510 on closing basis. On the higher side, eventually we see the Nifty, scaling towards 26,000. When we look at Nifty Bank, there is a very strong, hurdle at 57,500 at least for the day. So we are not expecting any major turnaround there. But overall, both the indices should stay in the positive zone.
All right, it will be very interesting to see if the Nifty Bank sustains past the current levels as well, because 57,150 to 57,200 were important supports when the Nifty Bank was a lot higher, and that was the support that was broken yesterday as well. So we'll watch out for that. But individual stocks, they're doing a lot, in today's trading session. So say, for instance, Blue Star, we had the management join us today. That stock's moved to the high point of trade. Quick Heal is another one which is up 4%. We're seeing good traction in names like RateGain as well, up 7.5%. Dodla Dairy, wide swathe of stocks doing well from across sectors. Would you have long positions as trading ideas, or maybe you think that this rally should be used as shorting opportunities too?
Mangalam, clearly the bias remains positive for the index. And if you look at all the constituents, right now the focus is on Nifty Auto. Now, if you look at the overall chart structure, it looks like, the sector itself is positioning for a 10% upside. We have seen that on its weekly scale, it had been consolidating for almost 8 weeks. We saw narrow range action within this particular pocket. But if you look at the overall structure, it looks like a classic bullish flag formation ready for a breakout. On an immediate basis, we may see a swing towards 24,120, but eventually, we see this particular swing extending towards 24,500 in a day or so. And the pattern target is placed somewhere close to around 26,700. So I think Nifty Auto should be in your radar. Nifty Auto should be on your radar. And from that pocket, we have recommended to our clients a stock like Maruti. Now here, if you look at the weekly, monthly charts, it has been consolidating very well. It maintained a very strong support bias near to that 12,400 zone, where its 50-day exponential moving average was placed. Yesterday, despite of the market weakness, this particular stock displayed strength, and the bullish formation was displayed on its daily scale. And from there, the momentum has been sustaining. So we are expecting that this particular rally may continue towards 13,160 and extend towards 13,600. And hence, we are still recommending building fresh long positions in a stock like Maruti, keeping a stop loss at 12,600 on closing basis. The other stock is Hero MotoCorp. Even here, the consolidation has been very healthy. A similar kind of a structure, it has rebounded well from its 50-day exponential moving average support, which is placed at 4180. The overall structure looks interesting because 6 weeks of consolidation is now looking mature, and we may see a rebound back towards 4,400. So keeping a target at 4,440, we are recommending building fresh long positions in Hero MotoCorp. The stop loss for the trade should be placed at 4160.
Okay, all right. Cut that, Sachi. Before we let you go, just one quick word on Vodafone Idea. We had Mr. Scindia, who's been talking about that in any industry, a duopoly doesn't work. He wants a larger number of players. So in all probability, Vodafone Idea survives. And that would be good news for customers. But will it be good news for shareholders? As we speak, the stock has moved to the high point of the day.
the stock has been outperforming since last 2 weeks. Now, if you look at the overall structure, it looks like a classic, breakout from a downward sloping wedge. Now, such kind of formations are, signs of a near-term bottom. So probably the support that it displayed somewhere close to around 6.5, I think that particular support may not be breached quickly, and we may see this particular rally getting extended towards 8.5 to 10. So I think it's better to remain intact. Keep a stop loss at 6.5 on a weekly closing basis. Keep accumulating this counter. We may see this particular rally getting extended towards level close to 10. So I think it's a positive setup, and the structure is getting better day by day.
All right. And do you have a call on M&M Financial? Because that stock also has moved to the high point of trade right now. Reported a decent set of first quarter update coming in, and the stock is extending its gains right now. So it's up around 4.5%. And a large part of the gains have come by in the last 20, 30 minutes or so. M&M Financials.
Mangalam, it's a good strong rebound. The stock has already almost engulfed 3 days of its price formation. So we may see further rally above 280 zone. So I think 280 would be an intraday target. One can continue holding long positions with a stop loss at 268 on the lower side. In case if we see this particular level getting breached, the rally may extend towards 296 in a day or so. So probably one can retain their long positions.
Take that point, Sachi. Thank you so much for joining in, giving us a view on the indices and a lot of stocks today. We'll take your leave on that note. With that, we'll also get you some ideas for